Hello, everyone. Good morning. Happy new month to you. Happy new month of June to everyone in the house. And I do hope you had a great weekend and, of course, pumped up and ready for the new week. It's a new week, of course, a new month as well. And, of course, things are going to be gearing up strongly. And considering the fact that we are at the beginning of the month, we are likely going to be seeing some high level of volatility, choppy market conditions, while market participants reposition themselves for this month. And as always, we are going to be monitoring three financial instruments, which includes the US All Spot, the USDJPY, and the XAUUSD. We are going to be doing a follow-up details on this asset and how we intend to strategically position ourselves for the next move. And besides that, I did share a couple of videos during the weekend detailing what my outlook is on the USDJPY and the XAUUSD. And for those of you who are following me on both my TradingView and Telegram platform, you must have gotten an update as to how we are going to be technically preparing ourselves for the moves around the USDJPY and the XAUUSD. To be candid, this week has started strongly, and of course, there's been a lot of miss out. For me personally, I missed out on that bullish move on the gold commodity, but I'm going to be patient enough to see how the market is going to play out around the current structure we have right now. And of course, I will be sharing with you in detail what I'm going to be looking at. So if you're a fan of any of these assets, I mean the US All Sports, the USDJPY, and of course the XAUUSD, stay tuned in as you do not want to miss out on these valuable ideas we will be deliberating on today. And before we go in, it is my routine to welcome the newcomers amongst us. I know we have a lot of newcomers in the house, especially from TradingView from last week. And excited to have you here with me this morning. My name is Sheriff Daramola. And for the next 40 minutes thereabout, I'm going to be your host as I take you on a trading journey where we shall be evaluating the financial market together. Now, it's important that I also intimate you on what to expect in the session. So, the Forex Morning Mastery is an educational avenue where we all come together as a community to try to understand how market participants are thinking using fundamental and technical factors to position ourselves for the next move. Now, the Forex Morning Mastery is run or is anchored 3 times in a week: Mondays, Wednesdays, and of course Fridays. So we do this same time on these days, 8:30 a.m. UTC. That's about 9:30 a.m. West African time, as we come here to see how well the market is doing. I see you in the comment section, D Mac Chocolate. Good morning to you. I guess this is the first time I will be seeing you in the comment section. Please let me know if that's appropriate, or probably I've get things mixed up. Hello, Constant. Good morning to you. I'm doing very well. I had a very good weekend, and I do hope you had the same as well. So I'm excited to have you guys around with me this morning. So let's start the week, and of course, you know how we do it in this community. The first thing we are going to be doing is to keep tabs with the fundamentals around the US dollar market dynamic. Of course, we all know how important it is for us to understand what is going on in the US dollar market. There is no way you want to be trading the USDJPY, the US All Spot, and of course the XAUUSD without really having a deeper understanding of what is going on in the US dollar market dynamic. Now, What you see on your screen right now is the DXY, that is the US dollar index chart, and we are focusing on the 4 hours time frame. And for those of you who have been with me for a while now, you will be familiar with the setup you are seeing on your screen. Now, in the last 3 to 4 weeks, we've had a beautiful support line around the $99 area, just right here to give a visual representation. So this is what the support line was looking like for the past 6 weeks, 5 to 6 weeks now. And of course, we saw how, despite the strong bearish momentum in this market since the beginning of the year, as soon as price got into that $99 area, we saw how it became difficult for sellers to break through. And as a result of this, we considered it to be a robust demand zone. And of course, we have been buying out of that structure in the last 2-3 weeks thereabout. Now, prior to last week's trading session, we had a descending channel. Let me zoom into the structure. As you will see here, we had the resistant line of the descending channel right here. And of course, we had the support line of the descending channel. And last week, we saw something interesting happen. Price broke out of the resistant line of the descending channel. And of course, following the dovish outlook from the US economy, we saw price nosedive back into this particular structure. And it's important for us to understand why the US dollar dropped significantly through the second half of last week. One of which is the cooling inflation effect in the United States. We saw inflation reduce, especially from the core PCE that came in on Friday last week, showing us that there is lower inflation, which obviously reduces the pressure on the Federal Reserve to keep interest rate high. Now, obviously, this is expected to weaken the US dollar as rate cuts become very more likely. Then, as a result of this, market participants are already pricing in a rate cut in during the later part of the year, and possibly another one during September and October. So, lower interest rate is synonymous to less return on holding on the US dollar, and this definitely reflects in the market as a weaker demand for this currency asset. Now, besides this, geopolitical tension is also a major selling pressure on the US dollar. We have investors have shifted to safe haven asset like the Japanese yen, the gold commodity, and the likes due to the Ukraine-Russian escalation, Gaza tension, the Houthi attacks as well, and has hurt the US dollar. And then if we talk about the tariff situation around the uncertainty around Trump tariff threat is also raising economic uncertainty, weighing on the US dollar sentiment at this particular point in time. And of course, this is further reflected on this chart, and you will see at the beginning of this week, a lot of market participants has been dumping the US dollar. Now, with that said here, it looks as if the path of least resistance for the US dollar remains to the downside based on all of these factors I've mentioned earlier. However, I still think that there could be some hope of light or light of hope, whichever case they, I don't know how they say that, in this market, considering a couple of events that we are looking forward to this week. Now, first of all, we're looking forward to the Fed chairman's speech, which is coming up much more later today. So this is the economic calendar. And by 5 p.m. UTC today, the Fed chairman is going to be speaking. Everyone definitely will be tuning in to see what his monetary policy outlook is looking like. If any dovish tone is confirmed, or if there is a confirmation of rate cuts, this could further fuel the selling of the US dollar. But if it sounds a little bit hawkish, that is, the Fed is not really willing to cut interest rate, it may give the dollar some positive traction. And if we consider the technical perspective on this chart here, we can see price is back into retesting the resistance line of the descending channel, and we may see this whole move as a false breakdown where momentum could increase again and push price to the upside, and this is subject to what happens today. Then there is upcoming macroeconomic data this week as well. So today, for instance, we are looking at the ISM manufacturing PMI. So this data will be giving us an insight into the industrial sector of the United States. So it's usually an index that ranges between 0 to 100. So anything above 50 is considered as an expansion in that sector, and anything below 50 is considered as a contraction. So if the data comes in above 50 or above the market expectations, as you will see here, the previous month came in at 48.7. Market participants are projecting a 49.5 for the month of May. So if data comes in higher than this, we may likely see a recovery in the US dollar. But if the data comes in lower, we may see this as the beginning of another wave of downtrend scenario. Then tomorrow we're also looking at the JOLTS job opening, which is a labor-oriented data, giving us an insight into how well the labor sector is doing. Then we have a bunch of other speeches. We have Logan, we had Goolsbee. Then tomorrow we have Cook also. These are Fed officials and members of the FOMC, and of course their narrative or the rhetoric they give is going to be carrying a lot of weight. So this is what we are going to be looking forward to, at least pending the time we come back here again on Wednesday. So as it is right now, we are in a new month, and what to expect and how to prepare is very, very important. So at this moment, traders, market participants are torn between slowing inflation, that is rate cut expectation, and sticky risk, tariff and geopolitical tension. And then the US dollar is going to be dependent on data this week. So we have a bunch of high impactful events which will culminate on Friday with the NFP. So there is a lot of volatility expected around the structure, and it's our duty here to identify, or let me say, dissect the chart to understand how market participants are digesting this information, how they are seeing these fundamentals, and then identify areas where we intend to either buy or sell. So with all I've said, I hope I made myself very, very clear. But if you have any questions whatsoever, feel free to let me know in the comment section. So I see your comment here from the Mac Chocolates. Oh, I guess right. I knew you. This is the first time you're here. I'm glad to have you around with us. So you asked a question. You said, do you think this can be a dangerous week to trade in based on the news from Russia about the revenge on Ukraine attack? Of course, geopolitical tension has been the order of the day for the last since the beginning of the year, and it has been a significant factor in the decline of the US dollar. And of course, I understand the perspective you're coming from, but one thing that gives me confidence is my hedge, and my hedge comes in the form of my technical analysis, the understanding of the price action on the chart, and then marking out structures that we are going to be using to navigate the market. And the more dangerous it seems, the higher the chances that we can scoop in some significant amount of profit. So because of that, that does not necessarily mean that we stay out of the market, but instead be cautious enough, be conscious enough to be able to employ our risk management approach into the ideas we are going to be looking at today. So I understand what you're talking about. It's very dangerous, but at the same time, dangerous times are always times where you can actually scoop in some significant amount of profit. So let's go into the chart and see what is going on, and let's see if the risk reward ratio is good for us to take opportunities, or we might probably wait out for the economic events to come in before making any aggressive bets. All right, the Mac Chocolate, I like that name. All right, so with that said here, let's dive right into the chart. And of course, the first asset we are going to be looking at, as always, is going to be the USOILSPOT. All right. So let's look at what is going on in that market and how we intend to strategically position ourselves for the next move. So on the USOILSPOT currently, if we look at what is going on from a long-term perspective, so what I'm doing here is to capture the narrative on the 4 hours time frame. So the 4 hours time frame is what you are seeing on the chart right now. And since the beginning of this year, we can see that the price of US oil had continued to nosedive. So we have some lower lows, lower highs. Let me give a visual representation here. So we see a lower low here. That was where price began this year. Lower high. Then we saw a lower low last month. And right now, price is back into what may be a lower high. And within this old time frame that is between the month of January and the present moment, there is a descending trend line which is duly highlighted with this pink dotted line. And we saw what happened in April. We saw price break down that descending trend line. And since the breakdown happened, price action had continued to maintain selling pressure below that structure. In fact, throughout the last 2 weeks, we can see how buyers have been finding it difficult to break through that descending trend line, which further emphasized the strength of the sellers in this market. Now, the question as we head into the new week is whether this resistant line will become a platform for buying opportunities. That is, if price can break above the structure, it could be a platform that could send price going higher. But if that is not the case and this trend line continues to be a barrier for sellers, we may likely see price drop maybe back into the support line of this descending channel I was able to mark out here. So this is a descending channel here, which is really going to be playing a significant role in making decisions this week. Now, with that said here, if we zoom into the current structure that is capturing the character of price action in the last 2 weeks, you will see that within that consolidation phase I mentioned earlier around the upper boundary of that descending channel, you will see price action had remained range bound, that is confined within the $63 area and the $60 level to further emphasize the prevailing uncertainty in this market. Now, oil prices, as at the beginning of the week, appears to be rising, as you will see this engulfing bullish candle that started this week, as you can see here. And this is because of fresh tensions in the Middle East, uncertainty over trade between the US and China, both situations that could disrupt oil supply. However, price may struggle to go much higher because OPEC Plus just announced in their meeting on Saturday that it is going to be increasing oil production, and strong US economic data is also expected during the course of the week according to market sentiment, and could push the US dollar higher, making oil prices more expensive globally. And if it becomes more expensive globally, coupled with increased oil production from OPEC Plus member, we may likely see price drop significantly to the downside. So I'm not going to be carried away with the current bullish momentum we are seeing right now, given considering the fact that from a technical standpoint, price still remains below ascending trend line. So how do we expect to navigate this market from this particular juncture? Now, the first thing we need here to make our job easier is to identify a key level. Now, the key level for me for this week is around the $61 area. And in fact, if we go to as far back as the beginning of the month of April, so we are talking about 8 to 9 weeks of historical data, you will see how the $61 level had become a key determinant of the direction of price action. So we can see here, this level was, at this point, it was a selling niche. We saw price break down the structure. Buyers found it difficult to maintain momentum around this area. And then during the mid-month of April, we saw price climb back above the structure. It stayed there for about a couple of weeks before it broke down again at the end of April. Then at the beginning of May, second week of May, we can see price had continued to oscillate around that area, consolidating within that structure to emphasize the prevailing uncertainty in the market. So that is going to be my key level for this week. And you know how we use our key levels in this community. As long as price remains above the key level, we maintain a bullish bias. And if price can drop below the key level with continued selling pressure below it, we will be bearish in that particular market. Now, with this understanding in mind, let's scale down into the 1 hour time frame, that is our execution time frame, to see how market participants have related to this key level since this new week began. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, on the 1 hour time frame, this is what I was able to come up with. So I captured where price action started this week. Price started at around the $60.30 level, and we saw this massive engulfing bullish candle before we saw the first resistance point at the $61.70 level before it finally broke out of that structure. And you know how we do it here. Whenever we spot our support and resistance, we have a range bound structure already. All we want to do is wait patiently for price to either break out the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And as you can see here, price had already broken out of the resistance line, which helped me to have a buy position, which is currently running at this point in time. So if you look at the bottom of your screen right now, you will see that I already have a buy position running with approximately 20 pips in profit at this point in time. Now, for those of you who might have captured this, maybe based on the knowledge you have gathered here in this community, well done and kudos to you. So what I will ask you to do right now is move stop losses, secure position at this juncture. Very, very important. We never can tell. Anything could happen from this area. So I will be moving my stop losses right above that $61.70 level. Now, what we are going to be doing now is to see how the market is going to react to that descending trend line we marked out on the 4 hours time frame. So if price can break out, retest this trend line, we may likely see another wave of bullish momentum happen from that particular area. But as it is right now, I will advise that we exercise patience and see what is going to happen here. And one thing we should also take note of is price may get into the trend line and respect it like it has been doing in the last 8 weeks to incite a sell-off to the downside. But let's see what happens when price gets into that trend line. I will definitely be updating us on both my TradingView and Telegram platform as I continue to monitor price action around this area. So that is my simple view on the US All Spot this morning. I want to maintain a bullish bias right now based on the fact that price remains above my key level and of course above the resistant line of that range bound structure that started this week. Now, if I in any way going to be selling the US All Spot, I would rather want to see the support line of this range bound structure broken and retested to the downside for confirmation's sake before jumping into a sell. Now, we may likely see an opportunity to sell before that breakdown happen. That is only when we see maybe a series of lower lows and lower highs right on the 15 minutes time frame that is convincing enough, telling us that, oh, buyers are losing the momentum. It seems sentiment is leaning towards the OPEC plus increased oil production, and if that is going to be the case, we may see price crash from there. But I will continue to monitor price, and if I see anything new, trust me, I will be updating us on my Telegram platform. So there you have it, my simple outlook on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking a 5-10 seconds break. Let's see if there are any questions before we move on to the next asset on our watch list. So stay tuned in, guys. All right, everyone. So in the absence of no questions, I want to assume that we are all on the same page, right? I hope you've marked out the structures accordingly. Definitely, we are going to be using this to help navigate this market today. In fact, I'm watching that descending trend line, the pink dotted line on your screen, which we marked out on the 4 hours time frame, to see how the price is going to be reacting to this particular zone. So if we can break it out, that will be the first time price will be breaking out of that structure this year. And if that is going to be the case, we may see price climb further to the upside. But if the sentiment leans towards the increasing supply from OPEC plus, we may likely see a pullback from that particular area. And of course, if the US-China trade tension resurfaces and probably like Trump has claimed yesterday, claimed that China broke the deal, and of course this has raised concerns over of slower global growth, and which could mean lower demand for oil in the future. So this could see price of oil drop to the downside. So I'm very, very keen to know what will happen around this area before the end of today, which could set the pace for this week. So let's see how things plays out, and I will definitely update us accordingly on my Telegram platform. So I wish us all the best of luck on the US oil spot. So moving on to the next asset on our watch list. Stay tuned. So the next asset we are going to be looking at this morning is the USDJPY, and I do not necessarily have to go into the higher time frame on this particular asset. For those of you who are following me on this channel and my other platform, you must have seen my outlook on the USDJPY, which I shared during the weekend, and of course I went into a detailed mark out of the chart, and of course the fundamentals around this market and what I am looking at for this week, identifying structures, key levels, and structural details to help me navigate this market. So if you had seen that, you will understand where I'm coming from. So I'm going to be only dissecting our execution time frame, which is the 1 hour time frame. And for those of you who are following me on my Telegram platform and TradingView, you must have seen that update. So as the week has begun, the Japanese yen has started on a strong foot. Presently, the Japanese yen is getting stronger. As you can see, price started the week around the 144.050, breaking through that key level we marked out on the higher time frame in my last USD JPY analysis to emphasize the strength of the Japanese yen. Now, why is the yen increasing at the moment? Why is the value of the yen increasing right now? Well, people, or let me say market participants, are now thinking that the Bank of Japan might raise interest rate again, since prices in Japan keep going up. That is, inflation is rising in the Japanese economic docket due to the economic data we have been receiving in the last couple of weeks. And at the same time, there is fear in the global market, which is making investors move their money into safer currencies like the yen. So as a result of these factors, it is very likely that the yen will continue its downtrend scenario. Now, to help me understand the sentiment in this market, I was able to identify a simple structural detail on this 1 hour time frame, which captures two things. First of all, the descending trend. As you can see, I have a beautiful descending trend line in place. In fact, I need to extend this trend line right here, so you can see how price at some point was using it as a support line. Then we saw price break down the trend line here on Thursday, and since then price action had remained below this descending trend line, though we saw price break above it for a while on Friday, but this did not last long, as you will see the momentum this week has pushed price below the descending trend line. And you know how we use our descending trend lines, of course. As long as price remains below them, we want to be looking out for patterns and structures that support selling ideas. And the fact that price remains below the key level as well further supports the idea of selling this asset. Though I joined the sell position very late this morning, as you can see at the bottom of your screen, I sold it around the 143.212, way below the 143.500 area, which is my expected entry point. Now, the breakdown here happened during the later part of the Asian session. And of course, I was still sleeping in this part of the world, but it's okay. We are in profit already, and I think it's high time I moved my stop losses to secure this current position that I have right now. And for those of you who are part of this trade, please kindly move your stop losses and secure this position right now. So as we continue to monitor price action, we are seeing price action gradually heading into a critical structure. Now, let me refresh our memories as to what I shared with you in my video. So if we go to the higher time frame, remember I captured the price action from the second to the last week of April till the current moment, and we have a couple of ascending trend lines. So this is the primary ascending trend line. As you can see here, price is gradually approaching that trend line. So what I'm going to be doing now is to see how price will be reacting to that trend line. So we have a bust up there. So as soon as price gets close to the trend line, we move stop losses again to secure some profit. We monitor what happens around this area. If sellers find it difficult to break through, that is, price around this area evolve into maybe a reversal setup in the form of maybe a double top, double bottom structure, inverse head and shoulder pattern, or a falling wedge, whichever case it may be, the breakout retest could incite buying ideas. But if this ascending trend line gets broken to the downside, this is going to be the first time this trend line will be broken in the last 6 weeks. And if it does get broken, it could signal more selling ideas. In fact, retest of structure will further confirm that for us, and then we will be joining the sell to the downside. So pending that time happens, we are still at a juncture here. Let's see what happens around the 143. Is it 143, 142.9 area? We are almost close to the trend line. We have about how many pips now? About 25, 30 pips for price to get into that trend line. So we shall continue to monitor price action around this area. If a reversal setup like a double bottom structure comes in, it could be the beginning of another wave of bullish momentum. But if price can break through this trend line, then we'll start thinking of selling the USDJPY. So at this moment, we maintain a bearish bias. Now, the only condition, another thing I would also like to emphasize here is that there is a possibility of price coming back to retest this 143.500 level that was broken this morning to instigate the second leg of the bearish move that started this week. It is a possibility. So we are going to, I'm just saying that just in case price comes into that structure. Now, if I want to be buying the USDJPY right now, I will want to see price break out of this descending trend line. And look at how beautifully it lines up with the 143.5. Now, I will not be jumping into a buy right away. I will wait for confirmations to happen before jumping in. And this will come, or let's say reflect on the chart as a breakout retest of both the 143.500 and that descending trend line to emphasize the buyer's strength And then if price goes ahead to break out of the 144.050, I will be adding another buy position. So that is the only condition that will make me buy the USD JPY as at this morning. So let's see what happens. We'll continue to monitor price action below this descending trend line. And of course, I will be giving updates on both my TradingView and Telegram platform as I continue to monitor price action. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking another 5-10 seconds off. Let's see if there are any questions before we move into the final asset on our watch list. And do not forget to give the video a thumbs up, please. Your support is highly appreciated. Your likes continue to inspire me to do more of this, and secondly, it also helps build this community. If the number of likes tally with the number of people on board, the chances that the YouTube algorithm will push the video to a wider audience of traders will be increased. So click on that like button, and thank you very much as you do so. And for those of you who already done that, thank you very much. So I'll see you in the next 10 seconds as we plan to move into the next asset. All right. So in the absence of no questions, I want to assume that we are all on the same page. And for those of you who captured some of this sell move, please move your stop losses, secure the position at break even, and let's see how the price will react to the current level we are in right now. And like I said, if there's anything new, trust me, I will be updating you on both my TradingView and Telegram platform. So with that said, let's move right into the final asset on our watch list for today. Stay tuned. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And of course, I opened my chart this morning to see this massive engulfing bullish candle breaking out of that descending channel we identified on the 4 hours time frame in my recent video. And of course, it was painful as I missed out on that opportunity. And of course, we have no other choice at this moment to wait patiently for new structures to emerge. And for those of you who actually capitalized on this, probably those who took advantage of that video I shared, and probably your time zone, you are awake during your time zone when this happened. Well done, kudos to you. That's about how many pips that is. That's about 100 pips just in the short term of about 10 hours. Well done, kudos for investors. And as rate cut becomes more likely, the US dollar tends to lose value at this point in time. And of course, a weaker US dollar makes it cheaper for people using other currencies to buy gold commodity. Hence, the demand for gold will definitely increase. And besides this, we are talking about geopolitical tensions as well. The situation, the conflict in the problem in Gaza, and the rising US-China trade issues are also making investors nervous. And when this kind of situation happens, they tend to buy gold because it is seen as a safe haven asset, a place where they can place their capital to store value. So for me, I strongly think that the path of least resistance for gold remains to the upside, except something otherwise happen. And if we are talking about otherwise, we wait to hear what the Fed chairman is going to be saying today. The timing of this speech is 5 p.m. UTC. Then we also have the ISM manufacturing PMI coming up in about 5 hours from now. That's about 2 p.m. UTC. We want to see what that is, and it's going to be setting the pace for what is likely going to be coming out of the US economic docket this week. So for me, I am bullish on the gold commodity. Now the question is, where is the right and appropriate zone to continue this uptrend move? Now let's go back into the structure. Now looking at the chart here, remember I said price had broken out of the resistance line of that descending channel, and this happened after a consolidation. Initially, price was confined within the 3,316.50 and the 3,296 before that breakout happened. And interesting enough, the resistance line of that range bound structure lines up exactly with the resistance line of that descending channel we marked out on the higher time frame. Now with this move here, theoretically speaking, it is expected that once price breaks out of a key structure like this, price is likely going to come back, retest the structure that was broken in an attempt to continue the trend. That is the theoretical understanding. Now the question now is, will this be the case? How are we going to see price drop to the downside? In fact, if we can see confirmation, let's look at the distance between where price is right now and that structure. So we are talking about 300 pips. So if we can see, let's say, a reversal setup here in the form of a double top structure, the breakdown of the neckline definitely can give us a counter trend opportunity, placing our TP maybe around the 3,317. Then let's see how price reacts to join that uptrend move. Now, for us to understand what is going on here, how are we going to be sure that price will retrace to the downside? It is not all the time price does this kind of retest of structure. In fact, if the momentum is too strong, instead we will see an uptrend continuation pattern. It could be a pennant, a flag, a bullish rectangle pattern where the breakout of the resistance line could confirm an uptrend continuation. So to have a better perspective into this, we will have to scale down into the 15 minutes time frame to see if we can identify a structural pattern here that could give us a clue if we are going south or going to the upside. So to do this, we'll scale down into the 15 minutes time frame. So this is the 15 minutes time frame here, and what are we seeing at this point? So if we look at the structure closely, we'll see that we have a consolidation ongoing. And hold on a second, let's see. So I'm looking at the 3,351 here. I will explain to you in a moment. Hold on a second. 3,351. Then we have the resistance line somewhere here. Let me bring back the candle chart. So we have it somewhere here. Let's say 3,000. 3,356, right? So it's like a $5 range bound structure we have here on the 15-minute time frame. And look at what we have price at. So we had an impulsive leg. Price went into a consolidation, right? And usually this could have been a flag pattern. That is, if price breaks out of that resistant line, it will have confirmed an uptrend move. So one thing I will do here is I will place a buy stop order here. So if price can break above the structure, if price can break above that structure, I want to be buying. Okay, so I'll place a buy stop order above the structure right away. Let me just do that. So buy stop is there now. Then we've seen price break down the support line, which we have missed at the moment. Now the question is it possible for price to come back and retest that structure? Can price come back to retest the structure? Well, patience can tell that, can give us an answer to that. If you have patience, you can actually wait for that to happen. But I also noticed that there is a support line somewhere here. We have a structure somewhere here. And I want to look for the psychological level. So I think the 3,345 is making a lot of sense. So 3,345. 3,345. I want to give this a green color. So we are looking for two things now. Since we have a breakdown of that structure earlier, so I will place a sell stop order below the 3,345. Okay, so I just did that right away. Now, another thing, so we have two things we are looking forward to. Price breakdown the structure inside the sell-off from there, or price comes back to retest the 3,351. When I see continued selling pressure, then I want to sell there. Then sell stop below the 3,345 get triggered to incite more selling ideas. Now, where will our TP target be? Our TP target is going to be around the resistant line of that descending channel that was broken this morning. So we saw an impulsive leg. Price is likely going to come back, retest the structure to continue that uptrend move. So I'm looking at placing my TP somewhere between the 3,325 and the 3,320. So if I do this, 3,325 will give me about 200 pips. I think I'm not going to be too greedy here, considering the fact that it is a counter trend opportunity. So I'll place my TP around the 3,325. That's about 200 pips. That will give me a $60 with my 0.02 lot size. So that is what I'm looking at the moment right here. But if we get taken out of this sell position, I want to see some, I'll let you know in the comment section of both my TradingView and Telegram platform as I continue to monitor price action around this range bound structure we are seeing here. So that is my simple view on the XAUUSD today. I hope I made myself very, very clear. If you have any questions, no question is insignificant. Feel free to let me know in the comment section. So I will take another 5-10 seconds off to see if there are any questions whatsoever before we start rounding off on today's Forex Morning Mastery. And I'm yet to see your response as regards to the likes. We have over 7 people on board, and the likes we have here is just 2, which shows that some of us are yet to click on the like button. So I really appreciate that. Let's use that time to click on the like button right away and continue to support this community. And for those of you who liked it, thank you very much for your support. I really do appreciate And for those of you who are here to click on the like button, please do. This is the cheapest way you can support this community to grow. And thank you very much as you do so. So let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you soon.